What is good? What is good? What is good? What is good? Kingsley Joshua, Trade Lord himself, come to you live, motherfuckers. Let's go. All right. So today, I'll be teaching you about market structure. Everybody, I get a lot of messages about market structure and basically how I see market structure. And it's very simple. It's mad YouTube videos on this. So I'll break it down for you. All right. So right now you see me box. I'm just doing my weekly, walkthrough of what I do. Right now it's 5:30 p.m. Eastern Standard Time right now. So basically, I mark up all my day candle opens, right? It's a nice little tip, nice little strategy for you guys. Mark up all your day candle opens. You know what I mean? I do it like a line here, and then I find the open right here. Basically, this is the open of each candle that you could see. I go to the open, I type in the open, which I already did right here. I type it in, push OK, boom, it's in there. Now from whatever time frame I go to, I know where my opening is, all right? And this is a way that I don't have to switch back and forth to the day candle or the day chart really. I know exactly where the day candle open now is. And shit, I can do this for the weekly too. Like the weekly open, this is this week's open, right? I can mark this weekly open, but I'm not going to do that right now. Mark that weekly open, and I know where the market opened for the week, right? So that's a little tip for you guys. Hopefully that helps. But market structure, all right. Simple as that. Right now, we're in a downward market right now on GBP USD. We have, this structure. Now I have all my candles black, right? And you see all the candles black, the same color. That's a way to leave out emotions. Emotions doesn't get in the way of my trading when I'm on this black candle chart right now. But if I switch back, right? If I switch back to, you can see the colors of each single candle. You can see the yellow candles represents the down, the blue candles represents the bullish, but all that stuff. But I'm on a different level right now, so I have all my candles dark and just black, no emotions. So when I see this yellow this big candle, bearish candle down, I have no really emotions to it because I'm just following market structure, and you can even see market structure a lot easier too. So we're at downward market. So basically, for example, on market structure, right? Market structure, and I'll break it down like this. It goes down like that. Right? That's market structure right there. This is how the market moves down. This video is for like the beginners, obviously. This is how the market moves up, right? That's simple. Market moves down that way. When the market continues, as you can see here, as it's going down, it broke structure here, made it what? A new higher low, right? Higher low, which is right here, came right down, which is right here, and it continues and continues, and now it's consolidating. That's why I have it boxed up right there, because I like my consolidation. I'm a consolidation trader, man. So when you see a break of structure, right? So say the market comes down, right? and it says it goes down further like this, right? Breaking this point right here. Breaking this point right here. Boom. That's a break of structure. And when the candle finish down here, past this point, that's a break of structure. Now, the next thing, when you see a break of structure, right? Okay, what you want to do now is wait. Wait till you get a nice little pickup, right? Nice little pickup right here. This is when I bring out my fibs. I mark from here to here. See which where it landed. Say if it landed right here at the 38 and then continues down. But what if it goes all the way right here, right? At the 60, this one right here. And then continues down, right? Oh, hold on. I don't know what I just did there. All right. And then continues down. And training view. That bad, y'all. It's tripping. Then continues down. To that point, right? You just had a nice Fibonacci, a nice 6.8 Fibonacci right there. Boom. That could have been an entry right there, right? Now, I don't want to bring the fibs in, but now you see a continuation because we have a break of structure, which happened right here. Broke back up, continued down from this point. That's our first lower high. So that was a little confirmation that we're in down structure right now, right? And you're looking for sells. We're looking for sells. Now, say for instance here, delete this really quick. Outside. We're in down structure right here. Market comes all the way up here, right? And stops at that point. What do we have? A break of structure. Right there. Break of structure. What we are looking for? We're looking for a lower high. A lower high. That's not past this point, right? So we're looking for the market to go pull back. Not say it pulled back right there, right? Say it pulled back right there. What is that? What is that on the FIB? Let's see. Let's see. A nice 78.6 retracement right there. It says stop right there. It's fizzling around, right? It's basically just moving around in this area, and then all of a sudden it wants to pop up, right? And it pops up, going past here. Now we have a continuation. So we have a break of structure right here, retracement of 78.6, and a continuation right there. Now we're in the uptrend. Simple as that. We're in an uptrend and we're looking for buys. You would not take buys when the market's going into up structure until market decides to break structure again, right? And just break structure right there at this mark right here. So what are you looking for? Now the perfect retracement would land right here at this mark where it broke structure at. And if you see a position, it lands right there. You pull out your fib, you see what it is, right? Oh, what is that? A nice golden ratio between the 50, between the 61.8. Boom. That's it. It stopped right there. And you see it, and if you see it fizzle, it's like fizzling around right here. Oh man, it's about to drop like a motherfucker. Boom. Take that entry right there. That's the target right there. Take that fucking entry. Boom. Have your like stop loss right up here for like your stop loss. Boom. At the 78. Boom. Get that trade. Get that trade. But this is how the market moves. The market doesn't go when it wants to go. It doesn't go all the way up, all the way down, in one straight line. No, it moves in structure. If it wants to move up and trend up, and what is it going to have to do? It's going to do a lower low, lower, a higher high, lower low, a higher low. I mean, a higher high, a higher low, a higher high. Then what happens? Break of structure. Then you're looking for what? All right, we're looking for sells. It broke structure. It finished below structure. All right, we're looking for sells. That's simple. Looking for sells. We're looking for a nice pullback. Looking for the nice fizzle phase, which is a consolidation area. Say it consolidated right here in this area. Consolidated right here in this area right here. Boom. And look, that's the break of structure line. We pull out the fib. It's a nice golden ratio. That's confluence. Right here, it stopped right here at the break of structure point. We have a nice consolidation. It's another confluence. We have the nice golden ratio confluence right there. Come on, take that trade. Win that money. Stop loss right at the 78. Make sure you have nice safe stop loss. Use good risk reward ratio wherever you need to do. Boom. Boom. Take that trade. Take that trade. Take that trade. Take that trade. Boom. Take that trade, bro. What? See the market fizzle out? You would have made like nice $4,000 right there. If you had like a nice 100K account, FTMO account or something, man. Come on now. This is the strategy right there. That's the strategy right there. But that's how market structure. That's the little example of market structure right there, man. I know it was a little sloppy on this, wherever the hell, but hey, you can go back. I hope you guys enjoyed that, man. Because I really was breaking down what market structure actually is. Yeah. So if you go on the chart itself, if we go on these charts, we hit these charts up, you feel me? Because that was a little demonstration, a little breakdown. That was a little beginners, mostly for the beginners right there. So if you go back here. Matter of fact, say we go back in time. Let's go back in time. Go back in time. This is GBP USD, right? What we see here? What we see here? We see an uptrend market structure. We're on the 4 hour. And market structure happens on every time frame. Every time frame. It doesn't matter what time. You could be on the 4 hour, you could be on the 1 minute. Oh, I can't even go back on the far on the 1 minute, but you could be on the 1 minute, right? Say you're on the 1 minute. Market structure happens here. Market structure is everywhere. What is this? Market's going up. Market's going up. What do you have? Boom. Boom. What is that? What is that? Market stopped here. Market structure started here. It stopped here. What is that? Okay. What happened next? Boom. Didn't exactly break structure, right? We're still in this phase. Still phase, but we're making what? What are we making? Higher lows. We're making higher lows. So we're going up. Boom. It goes up. Then what happens? Boom. Still didn't break the structure, so we're going up higher. Take that buy. Boom. We're up here. Then what happens? What the fuck happens? Boom. What's that? A break of structure, right? A break of structure. What are we seeing? What are we looking for next on a break of structure? What are we seeing? What are we looking for? We're looking for a lower high, right? But what happened? That lower high landed where? It landed where? Right at that structure line right there? At the same point? What? What? You pull out your fucking fib? What? Oh, look. We got a nice 50 in between 50 and 60 retracement right there. What? We got a nice wick right there. What? What happens next? Drop. Sell. Boom. Sell. We're in profit. Our stop loss is where? Where's our stop loss? Like up here? What is that? About like a 1 to 1, 2. It came close to a 2 to 1. It's close to a 2 to 1. But look at that. In and out. And that's 1 minute. That could have been a 1 minute scout right there. Scout. 1 minute. Then what happens next? What did market do? If you didn't take that action, you would have been boom. Broke structure. Now you have to look. Now you have to wait a little bit. Like, damn, okay. Now you gotta wait a little bit. Then what happens? Boom. It just chilled right here. What is it doing? It's ranging a little bit, right? Our stop loss still didn't get hit. Say you wanted to wait a little bit. Stop loss still didn't get hit. We know we're in an up structure now. So you gotta watch out. Because what is this? A lower high, right? But our stop loss still didn't get hit. We stay patient. Boom. And what is that? What is that, ladies and gentlemen? What is that? What is that? Nice 3 to 1 right there. Had a little drawdown. But if you stay patient, boom, nice 3 to 1 right there. If you had that 3 to 1 ratio. This is how the market moves. It moves that simple, man. It moves in structure. You learn market structure. Market structure is king. You learn market structure. You know what the deal is. All right.